We're not in probably the worst economic outlook that maybe we feared a few months ago, but things aren't good.
Just about everything is worse within the leading indicators, and it continues to suggest that, yes, we are going to have some kind of a recession.
The market has been buying into this far better than expected story for Europe.
We have basically a call for a recession in the US starting in Q3.
Everyone is saying, look, earnings expectations are still too high. I don't disagree with that, but I disagree with the sequencing. I disagree with the timing.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow in London, Lisa Abramowitz and Tom Keene in New York. It is a time of new accommodation. Lisa, it's real simple. The Bloomberg Financial Conditions Index screams, Jay Powell, do something.
Well, it screams that we're going to get perhaps less rate hikes, fewer rate hikes, and perhaps the Fed being a little bit more accommodative sooner. And I do think yesterday's Bank of Canada decision really informed that.
I agree. It was secondary but important.
It was important because, yes, they did come out with the expected step down, but then they suggested they might pause. They might not raise rates again. And that's the reason why you're seeing even greater accommodation, at least in the rate space. Reset
Thursday here with a lot of economics coming up. Michael McKee with that GDP report at the 8:30 mark. And across that is a data that's, somnolent, I think is the fancy word. John's, Victorian history or whatever he's taking. It's a course he's taking.
Is that what he's doing?
He's testing at University of London.
He's doing Victorian history.
Futures up 8 after, could you explain the stock market yesterday? I took the surveillance nap and woke up to up.
This to me was actually fascinating because the market wants to go up. We saw it down more than 1%, more than 2% at one point on the NASDAQ, clawing all of it back almost, ending almost flat after a lot of people really having some negative things to say about the prospective outlook ahead. Honestly, this morning, we see IBM shares lower after they reported better than expected earnings because what do they do in a slowing environment? By the end of the day, are they going to be up 3?
I don't know what it's going to be, and I haven't read Julian Emmanuel's morning earnings update note, and I'll get to that, and we'll report that to you. But Microsoft is almost a proxy for the bizarreness of where we are now, up big on the headlines, then down doom and gloom 24 hours ago when we were sitting here, and they crawled their way back yesterday to barely green. I mean, I think the ambivalence that I'm seeing out there on a Thursday is extraordinary.
If we get a soft landing, does that mean that any downturn in growth prospects are short-lived?
We look at the data here, and I'm going to call it today. Thursday, it's the new accommodation is what we've got here. And you see it in that summation of the Bloomberg Financial Conditions Index to review a huge negative numbers restrictive, Europe more restrictive right now. Not only do we grind positive, but at a positive 0.28 standard deviations. That's the statistic on the Bloomberg screen.
Which is fascinating because the economic data has been coming in disappointing more often than not in the United States. It's a different story, as John was pointing out yesterday over in Europe. But in the U.S., you have seen this grind to a lower level. So at what point, again, does that inform some sort of negativity? Or do people say it's priced in because of the sell-off we got last year?
A raft, as they say, of economic data. The Chicago Fed National Activity Index is Lisa's favorite. We get to the GDP. Lisa's going to cover that in the brief. I don't want to steal the thunder of durable goods.
I appreciate that.
Durable goods in the brief. Now, there's a lot of excitement. Futures up 8, Dow futures up 3. The VIX nicely under 20 after that good news back half of yesterday that we saw. In the yield space, not much to talk about. All in all, 2-10 spread, negative 67 basis points. A lesser inversion over the span of the number of days. I'm running out of steam here, Lisa. I got Euro at 109. I guess that's an important point. We really print a stronger Euro 109. Who said yesterday 115 is feasible?
Yeah, well, we were hearing